Alrighty, so I wanted to take some time considering the bloodshed that we've seen in the market to really thoroughly go over today's fundamental backdrop. So we're going to read that so that way everybody's up to date and educated on what took place and what's been happening and why the market sentiment has soured. And I feel really, you know, just hot about what's happening right now in the market. It's almost like distraction after distraction after distraction is unfolding. And we are really truly living in an era of misinformation and disinformation. And it's just now more than ever is the most important time in this digital transformation of our lives to make sure that we are funneling into and channeling into the right communities, the right education, the right narratives, the right mindset, right? Because those that do, I promise you, will make it out alive. And those that don't will unfortunately and very drastically fall behind those that are locked in, are paying attention. So, not to call this individual out, but this kind of just hits exactly the points that I'm talking about, how the algorithms are swayed more towards distractions rather than good, valuable, accurate information. And it blows my mind. So, I have to bring it to the masses because it is my attempt and my goal to save as many people as I possibly can, to bring and rise up as many of you like-minded individuals as I possibly can. Those individuals that want to change, that want to improve, that want to, be the one in their family bloodline that really make a difference. And that's what CYPRX is here to do. It's here to provide the foundation for you all to take the knowledge and what it is that we bring to the table to implement it so that you and your bloodline can benefit. And this gets at my soul. This is why I stay on social media, because if it wasn't for this, I would get off, right? If I didn't have the ability to try to convince at least one person that good, solid education still exists in this dark, dark environment, I would just go. But I know that one person will listen to this call, this recording, and be like, wow, this dude is making sense, and I'm tired of this bullshit. I want the real deal. And that's what we're here for. That's what CYPRX has been built for. So this blows my mind. June 2nd, 2026, when the market was absolutely being hammered yesterday, this person here, I'm not going to shout out their name on Twitter because, again, I'm not attacking this person. It's just mind-blowing that this person has hundreds of thousands of followers. This view alone got 258,000 impressions, and they said in this post, "This is effing unbelievable. Bitcoin just crashed $8,000, down 10% in the last 48 hours with zero major negative news. Meanwhile, the US stock market just closed at another all-time high. There's no explanation for this except pure price suppression and market manipulation, and that is entirely and 110% ignorant and the farthest thing from the truth." So we're going to go over XRP's price, what we were talking about months ago, to show people the level of accuracy that we deliver in this community. So that way we can keep everybody updated and up to par with what's happening. We're also going to take a look real fast at some interesting things that I've been paying attention to in regards to recent altcoins price action. We're going to take a look at hype, and then we're going to listen to some important individuals in the blockchain and fintech and digital asset ecosystem that have some very, very interesting things to say. All right. So starting off here to show the timestamps, and this is again not to say we told you so. This is to prove to those individuals that actually care about improving and want to make a difference in their investment careers that we have the data here at CYPRX and it does not lie. March 10th, 2026. You go all the way back to my analysis where I said to you all, downside risk in crypto, particularly in this XRP update, still exists. If $1.34 support is broken, and that fails, then the last support wall comes in at $1.27. A failure to hold at $1.27 and $1.18 becomes the last defense for buyers before lower prices become a reality. I said for now, personally, considering the slight shift in market sentiment we saw in regards to oil prices dropping back below $90, G7 mentioning oil reserves, and Trump's rhetoric around a possible de-escalation, if the war in Iran, I would say momentum is in favor of buyers, but being realistic, caution is warranted. We still have inflation data. If we could see lower inflation readings in both CPI and core PC, which now looking back, we did not, a weaker unemployment figure, primarily any US data that supports the rate cut narrative, that would be the icing on the cake for a bullish move to finish off the week. Inversely, we know that the markets are still battling with hawkish central banks, both the Fed and Bank of Japan, plus inflationary risks. So any higher inflationary readings that push back on the Fed's rate cut narrative would likely feed into dollar strength and continue to weigh on risk sentiment. We will continue to update you all accurately. And this is the first time that I highlighted the $1.18 region. So months ago, we talked about this level. Now, fast forward to today, inflationary pressures have come out higher, dollar strong, oil's up, Middle East tensions are still ongoing, hawkish Fed bets for rate hikes are on the table, rate cut prospects are pushed back. Everything that I was talking about, bringing a risk-off sentiment and pushing price into $1.18 months ago, now in the report today, you all will see has materialized and come into fruition. And look at where price came straight down into, to the freaking pip. The dark pool at $1.18, right? To the point. So now this is where we're at in XRP. This is the reality. And so everybody, this is the mindset that I have. Everybody that has been making content up to this point about XRP price going there or this market doing that, that did not show that this was a possibility to the point, in my personal opinion, should be ignored, should be completely ignored. And again, I'm not saying to lock in with just our content because there are other good content creators out there that exist, but this is at least at a minimum the content that you should be starting to soak up, right? And if you're not finding other good content creators that have this level of accuracy, then ixnay them out of your investment mindset and your thesis and stop paying attention to that and focus on the juice, focus on the reality. Because the reality is that most people are watching this noise, right? They're watching people with hundreds of thousands of followers say that nothing is happening behind the scenes and that all of this is just suppression and market manipulation. But in reality, the realness is getting suppressed. This information, the accurate data, is getting far less views. It's reaching far less people. And it's insane that that is what we're living through right now. And it is up to you as a responsible investor to make sure that you're paying very close attention to it. So why is all of this happening? What took place today? Why did crypto continue to remain suppressed? And why are we not seeing this huge bullish environment, even though there are so many different tailwinds supporting a bullish environment for crypto? What, in terms of the economy underlying, are pushing investors further and further away from speculative assets like crypto? After pushing to fresh all-time highs earlier on in the session, today NASDAQ finally ran into resistance on Wednesday as investors were forced to digest the combination of stronger than expected economic data in the US, rising oil prices, and renewed geopolitical uncertainty in the Middle East. The result was a broad risk-off reaction across financial markets, with the NASDAQ retreating from record territory while crypto remained pinned below the critical $2.3 trillion level. This session began with stronger labor market data after the ADP reported that private employers added 122,000 jobs in May, exceeding the expected reading of 117,000 and marking the strongest reading since January 2025. While stronger employment data would normally be viewed as positive for economic growth, markets interpreted the report differently. Investors immediately recognized that a resilient labor market gives the Federal Reserve less room to cut interest rates in the near future. This shift in expectations was reflected across the bond markets. And if you guys remember, just a few days ago, Francois asked the question about the bond markets and asked me to type out a detailed report about the bond markets and me explaining those for you all. And if you read that report, now you can see in real time how that's still affecting risk asset sentiment, particularly crypto, negatively. The 10-year Treasury yield climbed towards 4.5%, while traders increased expectations that the Federal Reserve may need to keep interest rates elevated for a longer period of time, potentially also consider additional tightening later this year if inflationary pressures continue to build. At the start of this year in 2026, markets were pricing multiple rate cuts. Today, that narrative has shifted dramatically, with traders increasingly discussing the possibility of future rate hikes instead. The inflation story was further complicated by developments in the Middle East. Oil prices surged towards $96 per barrel after the Energy Information Administration reported a massive $7.97 million barrel drawdown in the US. Crude inventories nearly doubled market expectations. And you guys remember yesterday, I mentioned today we were going to be paying attention to crude oil inventories. The report marked the sixth consecutive weekly decline in stockpiles, signaling tightening supply conditions at a time when geopolitical tensions remain elevated. We know that energy markets are already under pressure after reports emerged of renewed confrontation involving US and Iranian forces. Additional headlines also suggested that military operations remain on the table regarding the Strait of Hormuz, reigniting fears that a broader disruption to global energy supplies could occur if diplomatic efforts fail. Even though negotiations between Washington and Tehran continue, traders remain focused on the risk that any escalation could quickly send energy prices substantially higher. We know higher oil prices create a direct challenge for central banks, primarily the Fed, because energy costs, I say primarily the Fed, it creates this scenario for all central bankers around the world, but our focus is on the Fed, the Bank of England, the Bank of Japan, so on and so forth, the majors, right? This feeds directly into transportation, manufacturing, logistics, and consumer prices throughout the economy. Several business surveys released today highlighted growing concerns that rising input costs are beginning to impact price decisions again. One executive even described the current conditions as the definition of inflationary pressure starting to affect us. As inflation fears elevated today, Treasury yields moved higher and risk assets began to lose momentum. The Nasdaq pulled back from record highs as investors reduced exposure to growth stocks that are particularly sensitive to interest rate expectations. Financial conditions tightened throughout the session, with higher yields putting pressure on valuations across tech and AI-related equities. Despite the pullback right now, the broader equity market has not yet experienced a major breakdown, which I went over for you all. The retreat, for now, appears to be driven primarily by profit-taking and changing expectations surrounding the Federal Reserve policy, rather than the complete deterioration in economic conditions. In fact, several economic reports released today, including service sector activity and factory orders, continue to show resilience in the U.S. economy, which can still act as a support for equities. Crypto markets, on the other hand, have been acting differently, completely separate from other risk assets like equities. They're trading on a completely different backdrop, and that is the liquidity backdrop. So crypto markets still remain in a significantly weaker position. Today, the total crypto market capitalization continued to trade below the psychological level of around $2.3 trillion, which is the most recent dark pool that was broken, and is currently sitting around $2.27 trillion at time of writing. While equities are still trading near historical highs, crypto continues to struggle under the weight of tighter financial conditions, elevated yields, and stronger US dollar environment. From a risk sentiment perspective, the market is now facing multiple headwinds. Simultaneously, strong economic data is reducing expectations for rate cuts, rising oil prices are reviving inflationary concerns, treasury yields are moving higher, and geopolitical risks still remain unresolved. This is the combination that tends to be unfavorable for speculative assets, particularly cryptocurrency. So that is the reason why we're seeing this bloodshed. It is not because of no reason. It is not because Bitcoin just has a freaking mind of its own and it just does whatever the heck it wants. It's because investors with much more money than you and I are de-risking because of the economic backdrop. Looking ahead, traders will remain focused on developments surrounding Iran and the Strait of Hormuz, movements in crude oil prices, treasury yields, and upcoming labor market data. If oil continues climbing and yields extend higher, pressure on risk assets could intensify. Conversely, any improvement in the geopolitical conditions combined with softer economic data that surprises the market could quickly revive hopes for a more accommodative Federal Reserve rate cut and provide some formal relief for crypto, as the markets would likely start to price in that possibility. For now, crypto remains hanging on by a thread above the $2.27 trillion level. While Nasdaq futures pulled back directly into the institutional dark pool around the 35.87, buyers attempted to defend that area into the close, but the next few sessions will likely determine whether this is simply a healthy pullback within the broader uptrend or the beginning of a deeper risk-off move driven by inflation and geopolitical uncertainty. All right. So now that everybody is aware of the economic backdrop, we can now understand why we're seeing this type of sell pressure, and we can continue to react accordingly. So on XRP in particular, to the downside, my overall bearish targets before I think whatever it is that we're living through ceases to exist any further is when we liquidate these lows from February 5th, 2026. If it happens, where I will start to look to accumulate some more XRP, comes in at roughly around $1.11 to 91 cents. That is if we break the $1.18 threshold, which right now is the last line in the sand for buyers. Right now, they're not looking too hot. They're not doing too great. It would require some formal fundamental backdrop or some type of excitement in the market that brings back risk sentiment to take us well away from $1.18. We're up or to the upside, we will be focused on how we see buyers and sellers transact volume at $1.27. If we can see buyers break back above $1.27, turn it into support, the next line of defense for sellers will come with this most recent lower high at $1.34. If we can overcome $1.27 and 134, that would open the door for a much bigger and broader move back up into $1.46. Those are going to be the most recent upside targets in the most immediate vicinity for us to engulf before I get excited on any higher prices and give you any formal next update. For now, the market sentiment remains path of least resistance to the downside for crypto. Even if we were to see a pullback into $1.34, I would not get excited unless we saw a substantiating break above $1.34, turning that into support and then moving higher. This right here, this pattern, a break from $1.27 above $1.34, which would likely result in an EMA crossover, in a retest of $1.34, and I will change my bearish bias. Reason being is because even if we come up into $1.34, we could see these sellers here defend, and it could just result in a move lower. And then the bullish move that led us up into this premium could have just been sellers taking profit, and then sellers could defend. So for now, this to me seems more realistic until we see $1.34 re-engulfed by buyers, holding it as support, trapping sellers, and becoming aggressive above. All right, that's for XRP.